I'm, the work at NSP as Senior Deputy General Manager and been there for almost 21, 22 years. Right. The subject's overview in financial clients management is basically talk about customers trust and confidence. Now, why I'm telling so, you noted that in 2008 2007 period, we had a global crisis. We call them as financial crisis, right? Now what happened there? So you see, a lot of customers, right, are just moving to the just to the physically move to the bank and ask for their deposit money. And this is a classic example uh, which took place in way back in 2007 and 2008 time. So the Northern Rock Bank is a very famous bank in UK, right? How people are just rushed to the bank and ask for their deposit money. Why? What happened? Why people are rushed to the bank and ask for the money? Because people lost the trust and confidence about the bank. Now you look at it, uh, the the asset base or the value of that bank is 113 billion US sterling pounds. It is more than Sri Lankan economy. You know the Sri Lankan economy. What is the value of Sri Lankan economy? It's around 83, 85 range US dollars billion. Now this bank itself is having more than the Sri Lankan value, but still people are just rushed to the bank and ask the money. Why is that? Because loss of trust and confidence, right? And the people, if you have some situation like this, people try to withdraw their money without going to the bank through um, electronic means. Either withdraw the money from ATMs or maybe internet banking, like that. So that phenomena is called electronic run. It's called electronic. We are trying to withdraw. If you lost the trust and confidence, customers try to withdraw their money through electronic means. We call electronic run. Otherwise, the customer is just moving to the bank, physically going to the bank and try to withdraw the money. That incidents we call depositor run. So we also had experience in Sri Lanka during that time. People are just moved to the bank, visit to the bank and try to withdraw the money. So there are similar banks like that. In 158-year-old bank in America, Lehman Brothers, you see the value or the asset base of the bank is around 690 billion US dollars. And there are some Bank of America also collapsed, is worth of 1.8 trillion. So there are similar incidents took place in the world because of loss of trust and confidence. You noted in 2008, it was estimated this financial crisis cost approximately US dollars 22 trillion. Of course, this present COVID-19 pandemic, the lost cost is more than this definitely, but this was estimated in 2008 financial crisis. So why? So there are a lot of jobs were lost, around 15 million jobs from the financial sector because of this. Why all this happened? Because of the loss of trust and confidence towards the banking or financial sector. Right. So therefore, the most important thing in this financial clients management, how to build it, how to maintain the relationship and the trust and confidence about the financial clients. Okay. Now my subjects basically it covered in four broad areas. One is type of financial client. Second area, client's confidence management. Third area, financial product marketing. Fourth area, applications of HRM for efficient delivery of client services. And the last one is customer protection laws and practices. These are the 5 subject coverage area, the broad area, which I'm going intend to cover under financial clients management. So let's look at it now in details. What are these main subject area cover? Okay, first one, as you noted, types of financial client. Okay, what are the things we are going to cover under this? Right? We are going to cover depositors, a type of financial kind. So, the customers are having deposit their money in different type of accounts. Savings account, fixed deposits or term deposits, or demand deposits. So the customers who are deposit their money with these different type of accounts, these different type of accounts having different features. They're having different type of risks involved in it, different type of benefits to the customers. So we are going to cover depositors in this area. And then customers are buying different type of customers are taking different type of loan from the bank, like personal loans, consumption loan, housing loan, vehicle loan. There are many loans are taken by the customers from the bank. So we call them as borrowers, another kind of financial client. And there are some other customers who are investing money in certain financial instruments like treasury bills, treasury bonds, stock market, and investing money in purchasing debentures and things like that. So these type of customers, we call them as investors. And there are another set of customers. They are talking on payment service clients. The customers who are basically obtain some services from the banks to pay their utility bills, some advisors and things like that. So we have 4 main type of financial clients. So we are going to discuss what are the features and benefits of these clientele. And then, so these customers having a different risk appetite. What do you mean by the risk appetite? So some people are willing to deposit money in certain accounts. Some people are willing to invest money in certain financial instrument where you get high returns. Higher the return, higher the risk. So based on the customer financial clients, based on their risk appetite, we are going to divide the clients into 3 segments. One is risk averse. That means people are not going to take high risk. They are not going to invest their money in high risky products. And then some want to invest their money in the high risky products. So we are going to discuss all these things under types of financial clients, right? That's the one major area. Then the second area we are going to discuss clients' confidence management. So what banks can do to build up the client's trust and confidence? Who is our regulator? Our regulator is Central Bank of Sri Lanka. Also come up with a lot of initiatives and a lot of instruction to the banking sector to build up the client's confidence management. Okay, I'll give you an example. The SMS alert system. So if you deposit the money with the bank, or if you withdraw the money from the ATM, or if you do some transaction with the merchant, buy something from using your credit cards, or you do some payments, immediately you get a SMS message to your phone, and make it confidence your money is secured. Right? So apart from that, sometimes some banks are having a missed call. So you just put a missed call, immediately you get SMS mentioning your account balance. So there are a lot of initiatives have taken by banks to build up the client's confidence. We are going to discuss all those things under client's confidence management. And then we are going to discuss about another subject coverage area is financial product marketing, right? So we are going to discuss about marketing principles and marketing mix elements and market research and marketing channels under this. So what is marketing principles? So as we bankers, we need to market our product. What are our products? Savings products, loan products, right? Other services. So we need to understand some principles about the marketing. Then we are going to discuss about the 7 P's. What is 7 P's? Product, price, promotion, place. And since we are involved in service business, and we have another 3 elements, that is people, like people who are working in the organization, and process. Third one is the physical evidence. That means the surrounding, how your bank branch look like, whether it's convenience, things like that. So what makes the difference from one bank for another bank? How you using your marketing mix element to catering to your different segments of the customer. So second, the next part is market research. So we need to understand what is marketing is basically identify, anticipate customers' requirement profitably. For that, we need to understand what customers want. For that, we need to carry out some research to find it out, their requirement. Then only we can come up with better solution for customers' problem, right? And then, so another area we are going to discuss are marketing channels, the different type of marketing channels. Now, there's a very good example during this lockdown situation about the digital platforms, digital marketing channels. We have realized how important, and customers also realize the importance of having a digital access to withdraw their money or deposit their money or to do some transaction with the banks, right? So marketing channels mean basically you can sell your products through digital platforms. You can market your products through digital platform, communicate using social media and things like that. So we are going to discuss certain advantages and disadvantages of these marketing channels or delivery channels. The next area is what you call human resource areas. So people who are working need to play an important role of building of customers' trust and confidence. So under financial clients management, we are going to discuss some aspects of human resource as well. Right? What are the human resources? Things we are going to discuss. From the day you join in the bank, or that is recruitment, selection, hiring, then moving to the training and development, inductions and evaluation your performances, deciding your rewards or your salary. And when you're working, you may have some sort of a problem with the management, and you have grievances, and you do some things which are not falling line with but you're line with the management. So management take a disciplinary actions against you. Uh, what is disciplinary actions? All sort of things, and disciplinary procedure. All things are going to cover under human resources management. This is another area we are going to look at it. Right. So the last area what we are going to discuss is customer protections, laws and practices. And you know that, you know, we need to look after our customers. In order to look after our customers, so our regulator come up with a lot of initiative actions. One is introductions of customer charter. What are the duties and responsibilities of employees or banks towards the customer? And we also have a deposit insurance and liquidity support scheme. What is that? Suppose some problems due to some factor, one of the registered financial institution or bank or finance company collapse, and there is a fund available with the central bank, and the money is paid to the customers, the maximum of 600,000 rupees per customer per bank. So if you look at today's papers, the finance company was central bank has cancelled their license, one of the oldest finance company in Sri Lanka. So how are we going to compensate the customers? Through using this deposit insurance and liquidity support scheme. So we are going to discuss what are the advantages of that, how to contribute by the banks to that, and all these things under customer protections laws and practices. And also, we have a financial ombudsman. If you have any problem, a customer have a problem with the banks, some disputes, you can complain to the financial institute, complain to the financial ombudsman, and then you can get some solution from him. So what financial ombudsman is doing is call the customer and call the financial institution and try to resolve your financial problem. It's very nominal fee. We don't want to go to courts to do all these things. So why all this are happening? To build up the customer trust and confidence. So these are the five key areas your subject is going to cover. Right? So you noted that only the marketing and the HR you have not covered in any other IABF subject. So only financial clients management is covering these areas. Right. Just we look at it, the question paper. Right. I think up to now you may have an idea about what is the subject. So the subject is, just to summarize what we have learned up to now, this subject is purely depend on, we are going to learn purely how to build up customer trust and confidence. For that, what are the areas we are going to cover? One area is basically for identifying the type of customers you need to deal with in a bank. What are the type of products? What are the type of risk involved in buying these products? Things like that. Different type of clients like borrowers, then depositors, investors, payment service customers. We're going to learn that. The second part we are going to discuss, or in the financial clients management, is the basically is the client's confidence management. What are the areas where, what are the things we going to learn under this, how to build up customer confidence, what banks can do, what our regulator can do. And then the next area is financial product marketing. What are the things we are going to learn? Basically, we are going to learn about principles of marketing, how to use the marketing mix element, and some activities. And the fourth area is human resource area. So, from recruiting people to the organization and to give them a training, remunerations, then disciplinary actions, all things. Why? Why we need to learn? Because why we need to learn to provide efficient delivery to our customers, right? And the final area. So we just discussed customer protections. So what are the things as bankers, as regulators will implement or will do to secure the customers' protections? Right, these are the 5 key areas. Now let's look at it. What are the how your question paper look like, right? Okay, your question paper, like any other subject, same. So it consists of 8 questions. Your question paper consists of 8 questions. So each question is carry 20 marks. Right, the time duration for question paper is 3-hour question paper. Paper consists of 8 questions. Each questions carry 20, but you need to answer only 5 questions, including question number 1 is compulsory question. Right, so you need to, out of 8 questions, you need to answer 5. First question is a compulsory. Now your first question is consist of 10 small questions. Each questions carry 2 marks, 2 into 10, 20 marks. The first 5 is MCQ. You ask the question, they give the 3, 4 answers, you have to select one. The second 5 question, so they are small questions, short questions, and you need to give a short answers as well. Right, maximum one line or 2 lines. Right, so that also carry 20 marks. The next 4 questions you need to select out of the balance 7. So you have a lot of option, only 4 out of 7. So each questions carry 4 sub questions. Each sub question is carried 5 marks. So that means 4 into 5, 20 marks. So this is your question paper. And mind you, if you can answer the question number 1 properly, definitely you can easily earn 16 to 18 marks. Then, what is your pass mark? Is 45. I'm talking about the minimum requirement. Right, so you earn already 20, say 18 marks, you mean you have already earned around 40% of your pass marks. So try to concentrating on answering the first question, where it's easy to earn, is carried around 18. So balance how much then? 35 odds, 37 odds, or maybe 27 odds. So this is how your question paper look like. Okay, right, so if you look at it, what are the players in the financial system? What are the institutions in the financial systems in Sri Lanka? So you may noted that from your slide, you can see the central bank is our regulator, as you all are aware, and banks, finance companies, leasing companies, primary dealers, money brokers, insurance companies, all are unit trust companies, venture capital, microfinance companies. There are a lot of financial institutions which comprise of financial system in Sri Lanka. So, but we are in financial clients, we are mainly concentrating on the finance companies, banks, leasing companies, and things, organizations like that. So, how many banks in Sri Lanka? How many financial institutions in Sri Lanka? As according to the central bank statistics, which ended with December 2019, we have 6 licensed specialized bank, and we have a license 26 licensed commercial banks, and we have around 46 registered finance and leasing companies. Right? Okay. So, what is the banking composition? Banking sector. So, Sri Lankan banks are basically usually categorized based on their asset base, asset size. We call them as large bank. The banks who are having the asset base of over 500 rupees billion, we call them as large bank. So medium banks between 200 billion Sri Lankan rupees to 500 billion range, we call them as medium bank. And this is the present criteria, it can be changed. The small banks mean below 200 billion. So Sri Lankan banks are usually categorized based on their asset base. Above 500 billion, we call them as large bank. Between 200 to 500 Sri Lankan rupees billion, we call them as medium banks. And less than 200 billion rupees, we call them as small bank. You know, in Sri Lanka, we had 2 trillion bank, that is Bank of Ceylon. And there are 4 banks between 1 trillion to 2 trillion. That was National Savings Bank, People's Bank, Commercial Bank, and HNB. Those are the 4 large banks. And the other bank is Sampat Bank, is close to around 800 billion. Right. Other banks are, we call them as 200 to 500 range. We have around 5 banks, and we have around 21 bank comes under small bank. Right. This is how Sri Lankan banks are categorized based on asset. So we have finance companies, and Sri Lanka we have microfinance companies, 3 finance companies registered in Central Bank of Sri Lanka. You know, in banking business, whether bank or finance company, you need to register to get obtained license from central bank to do the financial businesses. That is why we call licensed banks. We need to obtain license from central bank to carry out the financial business. So Sri Lankan banks are usually divided into 2: the commercial banks, licensed commercial banks, and licensed specialized banks. And we have licensed finance companies and licensed leasing companies. So, what are the difference between these 4 institutions? Right? How? So, first point is, when you look at it, this fast question paper, so you in a position to get the answer. Okay. So just look at it, September 2017. This is the financial crimes management paper. The first question, first question, first part, carry only 2 marks. So September 2017. So they ask, which of the following product is not offered by non-bank financial institution? So all banks are not offered. Non-banks financial institution is what? Is basically the demand deposit. So one of the character, only commercial banks in Sri Lanka can offer demand deposit, or some people are called current account, some people are called check account. Okay, right. So then look at it. Another question: which of the following products is not offered by licensed specialized bank? Again, the answer is the demand deposit. Only commercial banks, licensed commercial bank, permitted to offer demand deposits to the customers, not finance company. Right? On the one major factor is the criteria who can differentiate between these four organizations is the demand deposit. Right. Let's look at another question. These questions came not from the finances client management. There's another subject called non-bank financial institution. This question came on there. That is September 2016. A specialized leasing company cannot raise fund. Now, how can you differentiate licensed finance company with a licensed specialized leasing company? Only commercial banks, licensed commercial banks, licensed specialized banks, and licensed finance companies can collect deposits from public. So specialized leasing company, remember, cannot mobilize fund from the public. So then what is the difference between specialized leasing company with other institution? So specialized leasing companies therefore cannot obtain or raise funds from the public. Therefore, the answer is public deposit. Only commercial banks, specialized bank, and leasing finance companies can take the money from the public. So that's another difference, right? If you look at, it's another question: which of the following does not form part of a finance company's product portfolio? Now, what do you mean by a product portfolio? Mean number of products or type of products available to market. That is called product portfolio. Now, fixed deposits, yes, right, can be issued by finance company, commercial bank, specialized commercial bank, and specialized license bank. Right? Savings account, yes, all these three can do. Leasing facilities also can do. But what they cannot issue is current account. So therefore, finance company's product portfolio is not carry a current account in their portfolio. Right? So I think now, okay, now funding sources of a leasing company do not include, what do you mean by that? Funding sources of a leasing company. How a leasing company earn money? Except for deposits. All other three methods they can fund. They can, those are the resources of their funding, but not for deposit. Why? So the leasing company cannot mobilize fund from the customers as deposits. So therefore the answer is, for this model question, is deposits. So I think now you may have an idea about what is finance company, what is specialized leasing company, what is specialized bank, and what is licensed commercial bank. Okay. Right. Having understood about the your syllabus and type of institutions, where we need to deal with. And the next set of area that we are going to discuss is type of clients. Okay, so before you move into the type of clients, or so we need to understand what is the difference between product and services. What is the difference between product and services, right? Because why financial institutions are offering services. So what are the difference between product and services? There are four main characteristics for a service. We call, you can remember this, you can remember ship, so you can understand the differences. Right. Let's look at it, the differences between product and services before you get into the business. Right. Product is tangible, you can feel it. It is appealing to your senses. You can see it, you can touch it and things. But services is intangible. That's the first importance. That is what you call intangibility. So one character of a service is intangible in nature. It's difficult to touch, difficult to smell. It is not appealing to your five senses, where your product is you can appeal to your senses. You can touch and see how good and things. Right? So then the second important thing is product can be stored. You can keep it for tomorrow. But services you cannot keep it for tomorrow. It's a perishable. It's a perishable in nature. Now, say for an example, think about hotel room. If you are not occupied today, you cannot keep it for tomorrow because today is gone. Think about the airline. There's a flight flying to another destination. So they have around 100 seats, but only 80 seats are occupied. There are 20. So these seats cannot be keep it for tomorrow. So that is a specific feature about the characteristic of a service. So services is perishable. Now, if this pen, if I not sell it today, you can sell it for tomorrow. But services is not like cannot be stored. That is why call is a perishable. Right? And another important factor, you look at it in the difference between services and product, it's inseparable. Now think about this product is manufactured by a company and user is a separate person. You don't want to meet each other. But as far as the services is concerned, is inseparable. Now, example, say if you want to have a haircut, what to do? Either barber need to come to you or you need to go to the barber. If you want to make want to do some makeup, so you have to go to the beauty salon, or that person need to come to your place. Cannot be separated. But products, manufacturer and the user no need to be together. Another important thing. The other one is variability. What do you mean by the same customer? Now say for an example, so these two pens almost same. There won't be any differences. But services is not like the same person. Based on the different time, he may behave in a different way. Right? Now, you go to the counter because of that counter lady or boy has given a good services. So you, based on that assumption, you go to that counter, expecting the same services you are going to get it. But today is different. Why? Because he have some problem with your boss or any other some personal matter. The services he is going to render to you is not as same. So that's another important character. That is what you call variability or heterogeneity factor. Right? Okay, now first look at it. The questions appeared in 2018 September. Look at it, 2018 September. That's question number 1 in your finance class management. Just read this question. Services exhibit several unique characteristics that differentiate them from products. Which of the following is not considered as a characteristics of a service? Right? Just look at it. Services exhibit several unique characters. What are the characteristics services are expecting? Exhibit. Okay. And remember, separability, heterogeneity, intangibility, and perishability. Now, based on that, which of the following is not considered as a characteristic of a service? Inseparability is a characteristic. You cannot separate it. Manufacturer and the user need to be meet each other, like haircut. Then you look at it, heterogeneity, the variability. Yes, the customers are different. And perishability, you cannot keep it for tomorrow. So then what may be the correct answer? So not considered the tangibility. Right. Okay. Then we will look at another questions which would appeared in September 2019. What is the difference between intangibility and inseparability of services in marketing? What is the difference between intangibility and inseparability of services in marketing? I told you in the first question you get two type of questions. One is multiple MCQ, other one is write short answers. That's a classic example. In 2018, they asked you to MCQ, and 2019 question, so they asked you to write small note. So what is the difference between intangibility and inseparability of services marketing? Right? Now, let's look at the answer. So what is intangibility mean? That means services cannot be seen, tested, felt, or smelled. So the product, the services is not appealing to your senses, but product you can, like this, you can touch, feel it. What differences? So that means what is difficult? Why service marketing is different? Because customer find it difficult in evaluating the services before you purchase. Now you go for a haircut, you don't know how you look like till such time you finish your hair cut. Then you know now has a nice haircut. Your dress is good today. Till such time you don't know. We go with the hope. We go to the bank by expecting services you have experienced earlier is going to give me a better services. Till such time you don't know. That's the difference between marketing a product and a marketing services, because intangibility characteristics, right? You can't evaluate before you purchase. Example, as I told you again, a cosmetic surgery. They are going for a cosmetic surgery, so you don't know with this. is successful or not, because that's the nature of service, right? So what is our job as bankers? We try to convert, because the service is intangible, we try to convert to tangible aspects, right? We are trying to convert this tangible aspect, right? Now how can you make it tangible? So services is intangible, so we want to convert our services to be tangible. How can you make it tangible? One factor, we're getting from another person, go to this bank, good services, get the testimonial from him. That is how you services make it tangible. You get a references. That is why when you apply for a job, right? So ask two references. You don't know, the bank don't know till such time you recruited whether you are doing a good job or not. Why you ask for the references? You ensure that he's going to tell you he's a good guy and he's working hard to make it tangible. Your job is tangible through getting testimonials, right? So, and most important thing is inseparable and intangible is basically it is very difficult to evaluate before you purchase. It's also is depend on your perceptions, your experiences, and your opinion, right? So that is the answer to for your difference between intangibility and inseparability. I hope you understood. Okay, right. So we stop today. I think there may be a lot of technical errors. We try to rectify all these things. I may repeat it now 2 times of this. So we try to come up with a better solution, with a better approach next time. I hope you understood. You can post any questions. Can I give my mobile number if you want? Yeah, if you can give me a feedback to my personal mobile number is okay, and that is not 777 864 202. Is very easy to remember. You just put not 777. You start with letter 8 and deduct 2 points from there. 8, then deduct 2, 8, 6, 4, 2, 0, 2. So if you have anything, any questions to be raised from me, if you want to change my way of lecturing, if I'm going a little fast, okay, you can just tell me and just drop me, and even for message is okay for me. So I'll try to do a better job. And of course, this is the first time the IBS is going to conduct lectures. There may be a lot of technical issues, not hearing properly, not seeing me properly. I compelled to do the same thing twice. So we will improve in the future with the next sessions. And mind you, you can these things are recorded, and you can, if you have a leisure time, you can go over and over again and get some full content into your mindset. Okay, so we'll finish today, and we will catch up next week, and then IBSL will inform you for the next set of series. Thank you very much, and sorry again behalf of the IBSL for disturbances which took place in the IT. Thank you.